Hello everyone, welcome back. Hope you guys are doing well. Sorry, trying to get this OBS thing straightened out here. All right, there we go. Should be good to go. All right, everyone, if you can just confirm to me that you can hear my audio, everything's coming through clear, and that you guys can see the dollar index monthly chart. There's a bit more of a delay on this one than usual. All right, everything's good. Awesome. Thank you guys very much. Ahmed, hello Dylan. Hope you are well. Yes, sir. I'm doing well. Hope you're doing good as well, Ahmed. New month, new opportunities. Yes, sir. Denisha, happy Sunday, Adora fam. Glad to have you, Denisha. Momentum Trader, Tyler, my man. Glad to have you. Joe, hello, hello. Christian, absolutely great week ahead. Looking forward to it. Market Madness, good afternoon. Satish, good evening. Tyler, thank you very much. Curtis, thank you, sir. Joe, Denisha, Frank, hello, hello. Thank you very much. Olawale, happy Sunday. Joseph Clear, awesome. Thank you, Olawale. Cyclops, trust your weekend's going great. A quick question. Do you have any video or can recommend any video explaining how the sizing of futures market is traded, i.e. lot sizing, handles, points, etc.? Yeah, Cyclops, that's a really good question. It's like a beginner's video on futures. I don't have any on standby, as that's not a topic I've been researching as of recent. But I have been getting that question a few times, Cyclops. So I'll go ahead and see what I can find, or maybe someone else here that has been doing the transition from Forex to futures, considering everything that's going on in the Forex world. If you guys have a recommendation, that'd be awesome. I personally haven't created one, and I'm not sure of any off the top of my head that I could remind you. There are plenty out there, but again, someone else may have an idea. If you could do me a favor, hook a brother up and send that link either into the Telegram or recommend it here on the live chat. That'd be greatly appreciated. Greetings from Zambia. Shout out to Zambia. Thanks for joining, Demi. Julian, hello, hello. Christian, month of March will be great. Absolutely, without a doubt. Looking forward to it. So with that, we'll go ahead and get into it and make sure my notes are pulled up. So as you guys know, March 3rd, so we're starting a new month here. So again, that means several things. Non-farm payroll week, new monthly candle. So you have to factor in power of 3. And also keeping in that, again, we're just going into a new month of trading. So with that in mind, February, not the best month, not the best month in terms of price delivery. Wasn't delivering clean, low resistance. And again, that's just been difficulty we've been seeing across all asset classes, right? So being able to understand conditions, manage risk in different types of conditions, and that's what keeps us in the game long run. So the month of February, not the best again in terms of trading, just because difficult in terms of high resistance delivery, not clean, and overall difficult across all asset classes. So with that being said, I'm expecting discuss with my analysts as well, my team, and we're expecting March to be much better just based off what we're seeing in the technicals top down. So with that, I'm looking forward to the month of March. I think we're going to see again much better price action here, and things are going to clean up much more now that we're getting into the further progression of the yearly range. So with that, without further ado, we'll go ahead and get into it. Keep in mind, one thing I just do want to mention here is that it is non-farm payroll protocol this week. So just something to keep in mind. And I think Powell is going to be speaking twice this week. So you do not want to get caught off sides with that. So keep in mind of your economic calendar, and always be sure to keep an eye on that. All right, so we'll go ahead and get into it. I'm going to do the top-down analysis, and I'll go ahead and take a few questions after. Cyclops, all right, man, thank you very much. I'll be looking in the comments. Thank you. Blue traders, you always talk about not the best month, not the best day, not the best year. When will you ever say it's a clean month or year to trade? Blue traders, that's a good question. That's a good question. So what you have to do is have a more research perspective, right? And when you understand what's going on in the world right now, what's going on in the financial markets, ask yourself, look at the price action in dollar, in euro, in pound, in crude oil, right? Are those clean, symmetrical, one-sided markets? There's your answer, sir. So hopefully that clears that up for you. Blue traders. Looks familiar. Kingsley, I scaled up to 750K in capital, Dylan, all because of these kinds of sessions. I appreciate the shout out, Kingsley. Thank you very much, and keep up the awesome work. That's big time. Great stuff. All right, so monthly chart here for dollar. Again, we've been in a consolidation on dollar on the higher time frame, right? We're in this dealing range from low to high. At equilibrium, market is consolidating. So we have this monthly fair value gap here. We're unable to get above that. So again, just giving you guys context as to where we're at on a longer term scale. And then in between this low, and we've just been inside that range here for this year, right? So not a lot of clarity on dollar. The market is sideways. It's consolidating. Do I expect us to stay here all year? Absolutely not. I look at it like a spring, right? That's getting coiled. So the more coiled the spring gets, the more it's going to expand. So with price delivery and understanding that, this large consolidation is going to lead to a very large expansion, right? But it's just a matter of waiting for that to occur. So monthly chart, we see the balanced price range here where these two fair value gaps overlap. We traded up into that. That was just a short-term target for the last month that we were looking for. Traded up into that, and then not much, right? So look at the size of the monthly candles. Very difficult read on this market in the lower time frame, right? So not the clearest read on dollar, again, because of these factors here, right? So knowing when a market is more predisposed to be high probability or low probability, right? And people that have been pushing in the majors, and when I say majors, the currency majors, your dollar, euro dollar, cable dollar, New Zealand dollar, your dollar-based currencies are going to be difficult, hard-pressed to find setups because of what we're seeing here on a higher time frame, right? So understanding all the insight that these higher time frame gives us, you can't neglect that or brush over that. Very important insights it gives us into our analysis. Moving right along, weekly chart here for DXY, and again, just in this range low, this range high, just staying here in the middle of that range. So with that in mind, not easy, right? For the whole year, really, we've just been in this small range. So the market traded higher into the bearish order block, one of the targets we were looking for on the upside. And then we've traded lower off that. And then what we took your attention to the past few weeks has been this breaker here, this last up close candle. And then this weekly fair value gap here. And then as long as you remain above that, we were sticking with the underlying narrative and structure that the market is bullish. But as for right now, it's just very unclear, right? It's not one-sided market structure where it's really easy to point to one side of the marketplace. So as far as on the weekly chart, we're in a range 50-50. So what I'm going to be looking for, what I'm waiting for is expansion, right? So the good thing about what we're doing is there's no guesswork, right? If it's not clear or it's consolidating, we have to just wait for more information. Again, the good thing is we know what we're waiting for. So we just wait for the market to tip its hand, right? And that showing of the hand is going to come by way of a displacement on the higher time frame. So, for example, anyone that's been doing this any length of time, understand how someone that, is relatively new, it can seem like it's never a good trading day or it's really difficult to find high probability conditions, but again, anyone that has any experience or isn't new, it's probably just a newer question, in terms of look at the price delivery that we've seen, right? What about the price action from here to here can you look at and say, wow, this is really easy price action. This is something that clearly there's institutional sponsorship behind and I want to jump on in there, right? You just don't really have that here. So when you start to, look at it and you have experience and you've seen a cleaner price action, right? Where it's one-sided, it's directional, that is going to be reflected across all asset classes, right? So hopefully that helps shed a little more light on your question. So looking at the recent delivery, I know it's a pretty busy chart. Let me take these levels off here. So we pressed higher into the buy side again that we were looking for. And then we have this daily fair value gap here in green. So we see here the consequent encroachment midpoint here. Market trade up into that and was unable to get there, right? And then when we broke back down through this inefficiency here, we've started seeing bearish order flow. So we call the market short-term lower, not short-term that we were ultimately bearish, but short-term lower because of the signatures the market's showing us. So as for right now, the market's just in a consolidation. It's not going anywhere. The analysis is 50-50. Gun to my head, from what I'm seeing right now, the market's bearish, right? So as long as we remain below this gray rectangle, which is just highlighting the range of this daily fair value gap here. So to show you what I'm talking about. So this buy side imbalance, sell side inefficiency, I'm highlighting that range and extending that through. As long as you remain below that, I'm bearish on this market, and I'll expect some type of market maker sell model to begin. And I'll share with you guys how I'm confirming that across bonds as well. So trading into this daily inversion, fair value gap, and selling off, we have equal lows here, equal lows here, here. So a lot of stacked sell side liquidity. So again, if we get above that, that would be an invalidation level. So again, for right now, in the present structure, which is not the most high probability, as you can see here, I'm looking for lower prices. But if we get above that, then I'll have to shift and get in line with, again, just what the market's showing. But as for right now, it's showing weakness. And then, as a gentleman there, James pointed out, there's also a daily breaker. Yep, high, higher, high, last down close as well. So there's a couple nested PD arrays in there that would be good to monitor and gauge the order flow around. So let's drop into the 4-hour chart. Yeah, so horrible price action as so far on dollar, right? So that's going to be reflected across all asset classes. But let's go into the hourly chart. So hourly chart, we had buy side here, these equal highs, trade up into it, and then we broke down, right? So that gave a nice bullish bias for indices, or not bullish bias because they've already been bullish, but gives further confirmation for higher prices on indices. So market trade higher, sweep the buy stops, breaking down. So as long as we remain below this inefficiency here, so getting here to the hourly chart, look at the intraday. As long as we remain below this fair value gap and breaker here, I'm bearish into the sell side here, here, and here. And then again, if we get animated through this sell side here, we have all this sell side here in equal lows, right? And that all hinges upon the market staying below this inefficiency and bearish breaker. So if we stay below this, we're looking for these prices here. If we get above that, then that's going to invalidate what I'm looking for, and then give me insight to then look for higher prices, right? And look for being look to be a bull in the dollar, right? So that's how I go about qualifying the markets, especially in these types of conditions here, right? It's not easy to just point to one side of the market and tell you the liquidity pool or the inefficiency it's going to draw to. I don't have that in this type of market structure. So I have to be demanding of the price action, which just means doing what I just shared here, right? Measuring key levels, key PD arrays, engaging the order flow and price action around those levels to then get insight as to where the market's going to go. Simply how we did the last couple weeks, looking for the market to trade into, sell side, and this inefficiency here. So that's all for dollar. Let's get into T-bonds. All right, so T-bonds weekly chart. We see the market's traded lower. So as you guys know, we've been bearish on this market, looking for this fair value gap here. It fell just short of that. Interesting. So now we have these kind of relative equal lows, but it did not get down to this inefficiency, right? So the target that I've shared with you guys was not traded to, but just shy of it, right? So if that was your target, again, still effective analysis. But we've also created a swing low on the weekly chart, right? So there's nothing, again, really in this market structure either that is easy to read or one-sided, which is why I just have to cycle through my time frames, as you guys will see when we get into the daily chart. But as for right now, what I'm seeing on the weekly chart is the fact that we've made a swing low, right? So we have a swing low created, so that could potentially lead to bullishness. And we have this fair value gap here in purple. So this candle's low, this candle's high, that's the fair value gap. And I'm extending that rectangle through. So seeing how we've also closed above that is also something that's significant, right? So we also have up close candle here. So I want to see how we trade into that. If we're going to be bullish, I expect us to get through that. But again, watching how we trade in this key level, right? So if we start to see resistance or bearishness come in inside this up close candle, then we can slightly see a rotation lower. But as for right now, that swing low and not being able to reach this discount fair value gap is something that has my attention. But again, let's refine this further on the daily chart. So since we were up here, remember I told you guys these up close inefficiencies here, these bissies, told you guys we were going to get down below it, use it as resistance and sell off into the sell side here. sell side here. And then we've traded into those levels. Market creates a swing low, trades down into that swing low. So we've traded in the sell side liquidity here and here. And then we've also seen a stop run. So we've also run below the most recent short-term low, and we've shown a willingness to reprice away from that. So what I'm looking at, what I'm monitoring, is this down close candle, our bullish order block. Market's trading down into it, using it as support. So seeing that we've taken stops, we've reached sell side liquidity, down close candle, support at the opening price. What that's telling me about order flow is that we're short-term bullish. And then also seeing that we've taken out a short-term high. So we've also seen a bullish shift in market structure after all this occurred down here. So as long as you remain above this weekly fair value gap and these two down close candles, if we violate the weekly fair value gap and these two down close candles to the downside, then I'm not interested in this market. And not that it's necessarily clean right now, but if we violate that, then we're likely just going to remain in consolidation or potentially reverse. But as far as the daily chart, what I'm looking for in terms of targets, as long as we remain above these key levels, will be the buy side here, then we have the sell side imbalance, buy side inefficiency here on the downside. So that's what I'm going to be looking for on the upside, which is going to further lend to lower prices on the dollar, right? So this is where this comes together, right? So for currency traders, if you need that extra edge in understanding what the dollar is going to do, you can't miss out on understanding how to read your bonds and your yield markets. And then again, if we get down below these two down close candles, then we're likely bearish and we'll resume lower. And again, if it does that, then I'll have to get in line with what the market's indicating it's likely to do. So moving right along, looking at yields. So markets have, let me take this off, the cursor. So the yields have traded higher into their respective weekly fair value gaps. And then we've seen a recent sell-off. So we've seen a swing high created on the weekly chart, and then a willingness to trade away from that weekly inefficiency. So if we see further weakness come in the yields, again, that's going to be something that is bullish, and it's going to be a further catalyst for lower prices on dollar, right? So that's how I use yields. The lower yields are, the less demand there is for dollars. The higher yields go, the more demand there is for dollars, right? So you can just relate that to buying and selling. Not that it's the buying or selling pressure, but that's the best way to understand how yields are even a factor. Moving right along into the daily chart. So as I told you guys last week, wasn't indicating strength, right? Seeing how we traded above these short-term highs here anemically across all the yields. So really unable to do what? Trade above these highs and gain speed through them. So seeing how we're trading above the highs, unable to displace, and now we're rejecting in the opposing direction inside of a key higher time frame premium array, which was the weekly inefficiency, right? That's indicating to me a market that's bearish. So as long as we continue seeing further acceleration on the downside into, we'll just give low-hanging fruit targets. If you just measure the dealing range, so the range we're in on a daily chart from low to high, from here, low to high, I'm going to expect the market to return to a short-term discount. So again, that's also going to facilitate further weakness in the dollar if we continue to see yields sell off, right? So going to be monitoring all these things going into the new week. And then as always, if there's any updates, we'll provide those updates to you guys. And given that we're now getting into March and we're going to expect much cleaner delivery across the asset classes, we'll also begin, again, just getting more active in terms of sending analysis and what we're looking at there. All right, moving right along into the S&P. We'll start from the monthly chart. Ahmed, be like water, my friend. Got to flow with the market is telling us. King of intermarket analysis. Appreciate that, Ahmed. Thanks very much, brother. Absolutely, absolutely. Got to be fluid. Got to be fluid. Can't get too locked in on a bias. So let's start from the monthly chart. Why are we looking at the monthly chart? Because again, we just opened up a new month. So we have to factor in the concept of power of three that isn't just limited to the daily time frame. It applies to daily, weekly, monthly, and even intraday as well. So it's fractal. It's fractal across all time frames. So the reason I bring that up is to say is because we're going into the first week of March, we have to know, or we have to consider, because you can't go into a month and not understand where we're at in terms of price delivery. So again, what I'm saying there is we know that every single candle is going to have 4 data points. It's going to have an open, a low, a high, and a close, right? So what I do, understanding the weekly in the monthly, well, specifically focusing on the monthly here, understanding that the monthly is going to have a bullish candle or a bearish candle, right? So understanding the monthly chart, it's going to have 4 data points, right? So with each candle, we expect there to be a wick and there to be a body, right? So understanding that there's going to be an open, a low, a high, and a close. So if I understand that, I want to anticipate what direction the monthly candlestick is going, whether that be bullish or bearish. And then once I come to that conclusion, I'm going to expect protraction for the monthly range, which simply means a move opposing the direction of where I actually think the market's going. And again, this is something that applies to all time frames. So this is why I use the first week in my analysis to gauge the market protraction for the monthly range. And then I use the insight from week 1 to trade week 2, 3, and 4 of the month. So those are the months where, or the weeks of the month where I prefer to do most of my trading once I've gotten the insight from week 1, right? Because I'm able to understand the open, high, low, close and how it's likely to deliver accumulation, manipulation, distribution. So all those concepts that were engineered by ICT, that were authored by him, come together, right? They intersect. So it's not the same thing just being repeated different ways, but it's a nuance to understanding these different ideas in price delivery. So understanding that, I say all that to say, looking at this monthly candlestick, if I'm expecting it to be bullish, for example, like this month here, I expect to see a wick lower first. This month we just opened and rallied, and that's just because we're seeing an exceedingly strong market. So again, what I'm doing this first week is I'm trying to gauge what this monthly candlestick is going to do using that first week for insight in terms of where it's likely to go and why I should go there. So looking at the monthly chart, market's bullish, right? So I'm not standing in the way of that. I'm continuously looking for higher prices in E-mini S&P. Weekly chart for E-mini S&P. So again, market's been exceedingly strong. So with that in mind, I am still looking for higher prices. I have not deviated from my bullish stance, right? Anyone that's trying to call a top in this market is just, again, getting taken through the meat grinder. I am not trying to call a top, and I'm trading in line with the underlying order flow. As I say, when the top's in, it's going to be in. But as for right now, I'm not going to be the one trying to call that every single week. So looking at the recent price action here in E-mini S&P, down close candle. Market opened low, high close, right? So if you just study every weekly candlestick when we're bullish, if it's going to be a bullish week, it's going to, again, have those 4 data points: an open, a low, a high, and a close, right? So not just taking what I shared from the monthly chart, now you can apply that to every single time frame. Even your hourly candlesticks are going to have that as well. So understanding that gives you a great advantage, because look at all these weeks being bullish, understanding that there's likely going to be some type of wick. Again, that factors into that whole power of 3: accumulation, manipulation, distribution. So looking at last week's delivery, same thing, classic bullish power of 3, which is what we expect in bullish markets. So open, low, trading into this candle's high. So that gives us that immediate rebalance right there. And then we see aggressive expansion into the latter portions of the week. So seeing how we make the low at this candle's high, and then we get a nice expansion higher into the previous week's high. So I'm going to expect that to continue looking for higher prices, especially with all the bullish signatures that we're seeing here, right? Inefficiencies left open, down close candles traded into, finding support. So everything here is bullish about the order flow. So again, not going to try to stand in front of this. And again, when the top's in, the market's going to show us the top is in. All right, so daily chart, where we left off last week, we had this daily fair value gap here, this large inefficiency. And I told you guys I favored seeing us trading into that fair value gap early in the week to do what? Obviously set up the true move of the week. Difficult trading, again, Monday, Tuesday, Wednesday, because the market's been consolidated, right? It was a consolidation day. So getting caught up in consolidations is never fun. Being able to anticipate them is great. But again, there's going to be times you're going to get caught up in those consolidations. And again, that's why just the risk management keeps you in the game. So difficult first few weeks, even though we could see it's likely going to draw into that daily fair value gap, but still not the cleanest price delivery in terms of trading, as it's just slow grinding lower. So market trades into the daily fair value gap. If I'm bullish, if I want to see that level supported, I'd want to see it do what? Stay up in the upper portion. So the fact that we traded into it, stayed above consequent encroachment, which is just the midpoint of that range, that tells me what the market's bullish. So that trust had given me that bullish bias Thursday into Friday. Down close candle here, bullish order block. Why? Because we expect support in the daily fair value gap, right? So the order blocks are more about the narrative than the actual down close candle. Hitting that daily bullish order block on Friday, giving the nice bias to want to be a buyer on Friday into that previous week's high. So again, still seeing bullish price action. As long as we remain above this down close candle, everything's still a green light. Still looking for higher prices. Nothing's changed on indices. And when that does change, we'll get in line with it. But again, for right now, looking for higher prices. Inefficiency here left open. So breakaway gap. Market is still expanding and repricing higher. Yeah, I won't go into all that right now. So yep, leaving the inefficiency open, staying in the upper portion, indicating a market that's exceedingly strong, giving us a firm bias Thursday going into Friday, trusting expansion higher. So again, as long as you remain above this down close candle here, I'm bullish. If we violate that down close candle on a daily chart, then we'll have to start reassessing what we're looking at on a longer term horizon. So working our way into the 4-hour chart. It's real nasty, slow grind lower into the daily fair value gap, staying in the upper portion. Then we see the market trade lower, and then we see a stop run here. And then further confirmation looking at last week's trading. So we see S&P lower low, NASDAQ lower low, and then Dow with a higher high. So we see a key SMT divergence in a discount array where we're already expecting support to come into the marketplace, right? So that was further confirmation for the bullishness Thursday going into Friday inside of the key daily fair value gap that we were looking at again from Sunday, right? So understanding institutional order flow, being able to read that gives you the insight into why the market was strong Thursday going into Friday. So 4-hour chart, we have this inefficiency here. So we have a fair value gap, and then we have this last down close candle bullish order block. So it'd be reasonable to see going into the month to come or the week to come for the market to trade down into this 4-hour fair value gap, right? And then how we trade there is going to be influential moving forward. If we trade into this, what I would be favoring, again, just based off the present structure, would be the market trade down into the 4-hour fair value gap and then continue higher for the weekly range. What has me hesitant to call the weekly range or even swing trade something like this is considering that we're in the first week of the month. First week of the month for swing trading, typically not the best. If you've been swing trading for any length of time, that's probably a conclusion you come to as well. Generally best to position yourself for swing trading month 2, 3, and maybe 4 if targets haven't been reached. And that's all part of understanding the power of 3, open, high, low, close on a monthly time frame. So back to what I was saying here for that 4-hour fair value gap. It's permissible to trade down into it, and it can come down to as far as the bullish order block. But there's no need to violate this intermediate term low here. So if we violate this intermediate term low here on the downside, then I'm bearish, and I'll likely look for the run into the sell side. But as long as you remain above these key levels here, I'll be looking for the market to trade lower, find support, and keep expanding higher. But again, if we violate this inefficiency or the last down close here, then again, that's going to signal that the market is likely weak. And then hourly chart, same thing there. So again, intermediate term low here. This would be the last line in the sand for me to be bearish. No need to get down through that. All right, moving right along into the NASDAQ weekly chart. So same thing as S&P. Don't need to break this one down too much. Same thing again as S&P. Looking for higher prices, just continuing the recent bullish order flow we've been seeing. So we have the weekly fair value gap here, midpoint, hit that consequent encroachment, hit the high of that fair value gap, and we're seeing further expansion to the upside. So here we have open, low, high, close previous week. Again, continual bullish power of 3 in a bullish market as we would expect. So still looking for continued expansion higher on NASDAQ, especially as long as we remain above this last down close candle. So this down close candle would be our bullish order block. And as long as you remain above that, I'm bullish. If we violate that, then again, that's something that I'll weigh out if and when we get there. All right, daily chart. So just the key levels that we had on from last Sunday. Looking at the bullish breaker block, which is the last up close candle. and then this daily fair value gap here, this inefficiency. So we see the market traded down into the daily fair value gap and breaker, bringing those levels to your attention last week. Told you guys if the low is going to form, if we're going to be bullish, it's going to form here. Why? Because if order flow is going to be bullish, if we're going to continuously see bullish structure priced in, the market's not going to violate the breaker. It's not going to violate the fair value gap on the downside. So seeing how we trade at these key levels, how we trade at the midpoint here on the fair value gap, perfect delivery here. Stays in the upper portion, support at the breaker, aggressive expansion higher, just as we'd expect, leaving the lower portion of the fair value gap open, right? Which is a strength signature that I like to see for bullish order flow. Another thing to be considered as well, one of the reasons why I'm still sticking with higher prices is that again, the order flow is exceedingly bullish. So again, told you guys about that signature there about leaving the lower portion of the fair value gap open. That's bullish, but also look at the relationship as to how we're trading below the lows. Rejects the lows. How are we trading through the highs? Displacement through highs, right? So this is a market that's still indicating it's clearly bullish and it's not showing any signs of slowing down, right? So still sticking with the narrative that we're seeing higher prices. All right, so 4 hour for NASDAQ, we have this inefficiency here and bullish order block. So again, last line in the sand would be the bullish order block. There's no reason to get down below that. All of this here is efficiently balanced here. So everything from this low to here is efficiently delivered. So there's no reason for the market to get down below the bullish order block. So as long as you remain above that, I'm looking for higher prices. Again, something similar to this for the weekly range. That's what I'd like to see inside this 4 hour fair value gap. Can trade down to the 4 hour bullish order block, but I'd want to see how we trade there going into the early portions of next week. Looking at the hourly chart. So from low to high, we have a range here. So it's reasonable for the market to retrade back down into this range. But then again, it should show a willingness to rally. And then again, there's no need to get down through this low. So if we start to accelerate on the downside and violate this low, that would change my perspective. But as long as we remain above that, I'm bullish going into the remaining week. All right, so with that, that's going to be all for the analysis and make sure I covered everything I wanted to. Yeah, and then just the last thing I wanted to share about about the monthly range. The reason I don't really like to trade much the first week is really one of the reasons why I don't like to trade a whole lot on Mondays, right? Because it's typically going to be the accumulation phase of the weekly range. So if I understand that typically the first week is also non-farm payroll, is more likely to be the accumulation phase of the monthly range, right? You can see how these concepts are fractal, right? So understanding that, I know when to pick my shots and I know when I want to be trading the most. So understanding all that is what gives me a more comprehensive approach to knowing when I want to be taking the most amount of risk and when I want to have my trade frequency be at its highest, right? So those are all things to be factored into your trading plan. All right, so I'll go ahead and take some questions now and we'll go ahead and get going. Maestro, Euro USD. Yeah, so Euro is going to be the same as dollar. I'll take a brief look at dollar. So if we get the acceleration lower on dollar that I'm looking for, we'll likely see that same thing materialize on the Euro. So that's all that there is to be considered there. And then again, just reverse everything I'm looking at on dollar for the Euro. And the pound has just been really bad, right? So you can see how poor price delivery is across all asset classes. Stock futures are much better, of course, out of really anything else, in my opinion. But seeing the difficulty in price delivery. Again, if this is your first year trading, you may not be able to have an appreciation for cleaner conditions or more difficult conditions like we're seeing now, you know, across all asset classes. But with more experience, you'll grow more of an appreciation for when markets are actually hard, right? When they're difficult. And anybody that has any length of experience trading is going to tell you it's very difficult. And when I discuss with other, you know, veteran traders as well, it's a very common sentiment that is being echoed. And then there was one last thing I wanted to share actually across indices, and that's with the Dow. So Dow has actually been reluctant to make a higher high. So that's something I'll be monitoring. I'm not looking to call a top because for there to be SMT, I have to be bearish, and I'm not bearish. But if we do see an SMT, right, if we see Dow not be able to take out that high and we start to see the indices actually start to rotate lower, then that would be something to be considered. So I was actually getting that question brought up a couple of times in Discord, and I also wanted to bring that up. So looking at how we have that divergence, it doesn't mean anything yet because we're still bullish, right? But if we start to see repricing lower, if we start to see bearish institutional order flow, then that SMT at the highs could be indicating something. But again, SMT is not a factor unless there's already another framework to be considered, right? Because SMT is simply a confirmation tool and not any type of be all end all in analysis. Find it first. NFP week is next week. Yes, sir. Maestro just inverse the DXY analysis. Yeah. Thank you, Ahmed. Lobo, what's up, homie? What's going on, brother? Maestro, how do you really feel? Yeah, Richard Williams, question. How much money have you made from trading so far, generally speaking? I just got funded last week, bro. Nabil, monthly power of 3. Daily SMT. Yeah, something to be considered. Something to be considered. So looking at the daily chart on the monthly, if we are to be bearish, and again, this is a hypothetical, right? So for me to be bearish, you have to have a framework that supports that, right? So there has to be a reason why the market should draw lower. Seeing that we have been in a primary uptrend and the market has been bullish, it's really difficult to try to call a top or justify lower prices just because, again, the recent order flow we've been seeing. But playing devil's advocate here, let's say we were to see a bearish month, right? That's absolutely a possibility. And we're just seeing the wick right here, right? And this is likely to be some type of manipulation higher before a true expansion lower. That is a possibility. And that would come by way of a very specific signature, right? It'd just be classic reversal profile where there would be some type of SMT at the highs, which I would look for, and then a breakdown, and then that would potentially confirm the bearish power of 3. But again, as for right now, really trying to stay away from calling a top and just staying with the idea that we're likely going to see higher prices. And then again, when the top's in, it's going to be in, and then we'll adjust when we get there. Hopefully that covers your question, Nabil. Blue traders, take a look at gold. Yeah, let's go see what's going on in the gold market. Forex.com. Yeah, so the month of March is going to be very interesting, right? And we're already starting to see movement across all asset classes as well. So looking at, and this is another asset class as well. So when you look at every market and you consider it, right, dollar's been consolidated. Gold has been what? Since December 11th, for the past 11 weeks or 77 days, what have we done, right? Nothing. So the difficulty is not only reflected in bonds, dollar, but it's also reflected in crude oil, in commodities, or all commodities, right? Your crudes, natural gas, gold, silver, it's all reflecting indecision in the economy and just a lot of different things that, again, I'm not going to get into right now. But the fact that we're starting to see displacement, right? That's like the light at the end of the tunnel. So when I was discussing with, my team here today, seeing how we're starting to see movement in dollar, we're starting to see movement in bonds now, we're starting to see movement in gold and other assets, the market's like a machine, right? So now that we're starting to see the gears turning on certain assets, that's going to loosen up all other markets as well. But also considering seasonality, right? Spring is one of the best times to trade, especially stock indices. So that's going to open up a lot of opportunity moving forward. So by also understanding time, it also gives you further insight as to when the market should be cleaner or when they're going to be more difficult. So looking at gold is interesting. So we wicked above all those highs. So as for right now, with what I'm looking at on gold, we have this wick here. We have midpoint, so that could be a potential target on the upside, this wick, consequent encroachment. And then we have the buy side here. I don't know if it poked into that. Yeah, so we have these relative equal highs here. Not that that's a lot of range, but there's equal highs. Then we have the wick, consequent encroachment. And then how we trade there is going to be significant. So if we start to show speed through the midpoint, we're likely going to trade to the high end. All right, dropping down into the daily chart. Again, just been in a really nasty range, but again, starting to see a bit of movement. So we have the buy side here, and then we have the upper portion of that wick right there. So I'd have that as an upside target. And then again, how we trade there will indicate whether or not we go higher or not. But again, not a really terribly clean market condition. But again, from what I'm looking at right now, higher prices. If we reject these premium arrays and start to sell off and show bearish order flow, we have equal lows here, and then that could be a reasonable target on the downside. So that's what I'm looking at for gold. Then we have quite a few gold traders here, so I wanted to start incorporating gold. But you know, when we're in a range like this, you know, central banks, you know, they're not getting on Adora Trading's YouTube and seeing what we're calling to deliver the targets, right? So I have to trade with what I'm given, and if we're not in the right phase of price delivery for there to be targets called, me calling targets in a consolidation isn't going to move it. So I have to be patient. But again, we're starting to see movement now across these asset classes, which is something I'm looking forward to. So I'm expecting much more movement going into the month of March. So I hope that was insightful for gold, how I'd be playing it, what I'd be looking at moving forward across gold. And actually, let me just take a look at. So looking at gold and silver. Yeah. Interesting. Okay. All right, blue traders took care of gold. Remnant capital, dollar seasonals are bearish. Yeah, exactly. So also seasonal tendency considering March as well. Something also to factor in, absolutely. Ahmed, I think only possibility could be stronger index, making a lower high like NQ, or a weaker, make a higher high. Yeah. I think smart money could be moving volume to gold because they feel stock correction incoming. Yeah, it'll be interesting to see what they do. A lot of things are going to get shaken up this year. We're going to see a lot of money being moved through different asset classes and positioning at higher levels of wealth. So it'll be very interesting to see what's going on right here. You know, we're seeing, or from what I'm seeing, a lot of CEOs, business owners are selling a lot of stock at these all-time high valuations. So, you know, are we potentially seeing distribution or a run lower? I don't know. It'll be interesting to see. And that's the nice thing about scalping is that there's fresh bread every week, every month, right? So understanding that long-term approach is great to have, but even if we don't have it, because it's not easy, right? We're at all-time highs, and most people, well, I mean, really nobody has tools for markets at all-time highs other than just trade buy models and use fib projections. Outside of that, there's not really a whole lot to go off of. So embracing that uncertainty that we have going into this year. It'll be interesting to see what we have moving forward. But again, one thing that I've seen just continuously do prove to be a loser's game is trying to call a top, though. So that's something I completely stay away from and just keep trusting the bullish order flow. ZAL USD gold is even ugly in the higher time frame. Yeah, it's been pretty bad. Can you take a look at Bitcoin? Yeah, Bitcoin's been hot. Let's look at the so weekly chart. Buy side liquidity here at the all-time highs. That's the only thing. As targets on the way though, there's a rejection block here, which is the highest body. And then you can even get a measure the consequent encroachment as another target. And then through the midpoint, we have the all-time high. And then after that, just have to rely on fib projections to the upside. And yeah, so that's what I'd be looking at on Bitcoin. Still bullish, indicating it's ripping higher. Looking at the daily chart, I'd want to see this be accumulation expansion. So, or consolidation to an expansion, just like we saw here. But we'll see. Maybe it'll fall short of those highs. Not terribly interested in Bitcoin. But as for what I'm looking at, this market is extremely bullish. And again, you don't want to try to short a rocket. So hopefully that's helpful. To take a look at Bitcoin. You take a look at crude oil. Yeah, I'll take a look at crude oil. That'll be the last one I'll look at, and we'll go ahead and get going here. So crude oil's finally traded into these highs. So I have been looking at those highs for a few weeks now, but again, with the delivery here, there's not much to show for there, right? So finally punched into these relative equal highs here. So what'll be interesting to see is again how we trade here. So I see what you're saying on the banger short, right? Like a turtle soup, fake run higher into the highs, and then break down lower into all the stacks outside here. that's something to be considered. So what we'd want to monitor for crude oil is how we trade above this high. So given that we've just now reached targets here, I want to see how we trade there. So do we see the market start to reject and sell off from here and reject these highs here and break down away from these highs and start seeking sell side? Something to be considered. But if we keep displacing higher, then we'll have to keep trading higher prices on crude. But again, if we start to break down below these lows here, and that's absolutely something that would be bearish into the downside. So that's what I'm looking at for crude oil. Yeah. So we'd have to see some type of rejection and break down from here for me to be bearish on crude oil, given that we've just reached key targets. So I hope this one was insightful. Let me drop into the Discord real quick, make sure I don't have any messages there. All right, guys, that's going to be it for me today then. Hope this one was insightful. Let me double check the chat. All that low resistance liquidity run below juicy. Weekly fair value gap, monthly fair value gap. Yeah. Monthly fair value sell. Yeah. I like that setup. I would personally, and this is just what I'm doing, right? This is how I would take a look at crude and attack it. If we start to get weakness and displacement from, as you mentioned, these higher time frame key levels, then that would absolutely, be something that would set up a nice short. So, all right, guys, that's gonna be it for me. Again, hope this one was insightful. Danny, EUR, Euro. Yeah, I already took take a brief look at Euro, Danny. And if you want, look at dollar and just flip it over. Anita, hit that like button. Thank you very much, Anita. Hope you're doing lovely. Ahmed, thank you. Yeah, thanks for joining, brother. Appreciate you supporting. Tyler, thanks, Dylan. Pleasure's all mine, my man. Bernie, Joe, Julian, Frank, thank you guys. Appreciate you joining. All right, so with that one, guys, that's going to be it for me today. Take care, Maria. Rich Carey, thanks, mate. Looking forward to another great week with Team Adora. Myself as well. It's going to be lovely, guys. Have a good rest of your week. Take care, everyone. Have a awesome rest of your weekend. And stay safe until the next one. See you guys.